So welcome everyone. I'm super happy to have this webinar, and actually we've known each other with Costas with quite a lot, like many years now. We were meeting each other in the old life when we had there were physical shows, and we bumped into each other in quite a different places inside Europe, and we were like at that time like growing our businesses. Yeah, starting. So it's really fun to be now in 2021 June and to have this discussion and to meet each other. So for those who come often to our webinar, they know we start with a fun fact, which I think is a thrilling exercise for Costas, right? So like I can't wait to hear for your fun fact, Costas.
You didn't prepare me for that. So, well, I guess fun fact is I like social dancing. So over the past few years, I tried to perfect my skills on boogie woogie, rock and roll, Lindy Hop, and even samba. So the pandemic took a toll on my dancing skills, and what I really like about it is, especially when you dance to live music, the fact that you have to improvise. It's very important to be able to adapt and play to the tune. Play to the tune of
the rhythm.
Yeah, the rhythm. So that's the fun fact of.
And let's jump on that. It's like also like being able to go to the rhythm of the business, and Amazon is very much about being successful. So today we will talk about samba, we'll talk about rhythm and dancing in tune with the rest of the music and in rhythm. So thanks for that introduction, Costas. The funniest part would be obviously to have a video of you dancing, but that's not that kind of show. So that will be another time. So maybe you can give us a bit about Storefront and who you are and what kind of issues does Storefront solve for customers?
Yeah, I'm the head of growth or head of business development at Storefront. And what we do is we work with already successful e-commerce retailers and private label sellers. And we are basically providing liquidity in the form of daily cash advances. We do that across 17 Amazon marketplaces. We are the only global solution currently that covers a vast number of Amazon marketplaces. And actually, we're also able to onboard companies and legal entities across all major jurisdictions, right? So European Union, Canada, US, even China. Yeah, that's the product that we provide. So helping e-commerce sellers accelerate their growth.
So that's very interesting, and that's a topic which I find usually specifically in Europe, like funding is always a topic which a lot of companies are shy to talk about. I don't know, or it's not as open as in the US, and I think that's super important to fund the business, because oftentimes the bottleneck of growth is about being able to finance the supply, right? And if you like, there's quite a few names out there, and like very big names into that sort of financial environment. What makes Storefront a bit special and different from the others, or what kind of specific pain points people would want to go to you instead of others? In which cases, let's say?
Well, I think, the main thing about us is the global reach that we have, the fact that we can fund e-commerce retailers and sellers in multiple currencies, the fact that we offer a very transparent interface, and we also offer fair pricing to our clients. A lot of the clients that we have onboarded just back when I met you, they are still with us. So we have clients that they have been with us almost 3 years, and they have used that daily cash advance in such a successful way to grow fast. And literally, actually, one of them is selling one of his brands to one of these Amazon aggregators. So that's
Okay.
something that we're very happy that we have contributed to the success of such enterprises.
Very good. And so could you explain a bit more details? And I know you have a presentation, so do use it whenever you feel it's the right time. But I think it's interesting to understand, okay, how does that a brand, like you take this example of this successful brand, how did they use Storefront in which like capabilities or how, like technically what happened and how did that help them to grow?
Well, listen, I don't know all the intricacies because, of course, we are, and nor do I want to take credit that we were the primary cause, right? The centerpiece here is the entrepreneur himself or herself. So obviously they're doing something right. Obviously they have found the right product, the right private label product, and they put the right processes and team in place, of course, to deal with the Amazon system, right? The Amazon mechanisms. And what we do is we provide liquidity. So across when it's a he. So when he started, he was primarily in Europe, right, in the Eurozone and the UK. So Amazon was holding the funds back. He could not restock fast enough, right? So his main suppliers were in the continent. So he couldn't restock fast enough. So basically running out of stock, this is like it's not a good situation to be in. So he used Storefront initially to, restock faster and build his brand on Amazon. The second benefit, which I guess it's a continuation of that, is that he was able to expand to other marketplaces. So he added, while in our service, he added the United States, Canada, and Australia. So
And
you know,
how,
so
in which capacity did Storefront help them? Because like we help also sometimes brand expand and we help them handle the account and everything. But I believe when you're supporting, how, in which way did you support him? Is it the same way of funding him or providing
funding,
advance
of
cash?
course.
Yeah.
I mean, there are two things. The primary business, the primary product is the funding, right? So we can fund your business in the States, in the US marketplace, in Canada, Oceania, and of course in Europe. The other, let's call it a secondary benefit, is sometimes we are called, sellers reach out to us for advice, right? So we can also give business advice or give advice sometimes about, what's the best way or to expand to a marketplace or if their legal entity is optimal. There have been cases like that where we tap into our knowledge. Remember, Storefront was founded by seasoned entrepreneurs, former bankers and traders in the city of London. So overall, our team is, let's say, it's mature, right? And we have seen things, right? We have seen successes and we have seen failures. We have also learned, and we view our clients as partners, right? Because if we provide the liquidity and they're not successful, that goes back to us.
Makes
And
sense.
that's exactly. So it's not that we're selling a subscription. It's not that we're selling repricing algorithm or software package or an SAP, what have you. We are indirectly, we are also uh, contributing to their success, and we really want them to be, reach their goals.
And so technically what happens is basically, let's say, so I've got a seller account, I'm selling 1,000 euros a day. And so when that happens, Amazon takes like 15 days to pay it back whenever if they don't hold the funds back. If you're with Fund, basically you will get like a percentage of that amount every day. How does that work?
Right, right. Listen, I don't want to do a hard sell of our product. I want
No,
to
but it's just
jump
to
into,
understanding of the
yeah, yeah, yeah. Of
financing. Yeah.
course, of course, yeah. I mean, I really appreciate what you're doing. So yeah, obviously, irrespective of the marketplace payment terms, right? Because we're not only on Amazon, we're also on Cdiscount, on back market, and we're adding other marketplaces. So irrespective of the marketplace payment terms, you sell today, you get paid today. So over 24 hours, we integrate, this is the API integration. We integrate with your data flow, and we read your credits and debits over 24 hours. In the case of Amazon, we do that across 17 Amazon marketplaces. And right there after midnight, we advance 80% of that balance, right, into your account. And we can do that in multiple currencies. So we can advance concurrently, right, in euros, pounds, of course, US dollar, Canadian dollar, and even Australian dollar. So, many sellers that are international, a lot of our clients are international, so they want to manage the currency risk themselves. So yeah, that's fine with us. We can offer that service, and they can get their proceeds in multiple currencies. When Amazon pays, we basically forward that 20%. Remember, we advance against a promise that the marketplace will pay on day X, right? When the marketplace pays, of course, we forward the 20% buffer to protect us against unforeseen Amazon charges, product returns. We have seen a lot of that during COVID, especially with FBM, high ODR, supply chains were broken.
And and how do you reconcile that? So if there's a return,
well, if there's a return, we have that 20% buffer to protect us, right? And of course, if it goes over, and if it goes over and the client stops selling, obviously they're going to go over 100%, right? But such cases are rare, and all of our retailers, they have managed to survive and continue operating.
And so, and it's a factoring solution basically, right? It's like
Exactly.
It's getting paid in advance. And what's the cost? Because my bank, like I was in distribution for a long time, and distributors tend to do factoring with banks, and that's a very similar kind of setup. And what kind of fees? Usually it's a percentage of
it's
of
a
sales,
percentage. Right? So we are the only service that applies its fees on the balance. And unlike our competitors, we do not apply our fee on gross sales, right? So we apply the fee on the balance. That's the actual expected payout from Amazon. Our fee ranges from 1% to 2%. So for entities, we do not onboard, we hardly ever onboard clients that they're doing less than 350,000 a year.
Okay.
Pounds, dollars, euros, right? So most of our clients are over the million mark. So they're already successful, and we want to accelerate that success, right? So that's the product. But let's just jump into
Go. Very good
because
idea.
I feel people have joined to find out, right, about daily cash advances versus loans, and this is a great subject, a great topic that you picked, and I didn't want to do a PPT, I didn't want to do a PowerPoint presentation. However, everything revolves around one ratio. So I just want to visualize that and talk a little bit about it. And then, of course, we can switch back to the conversation. So let me share my screen. And right, here we are. And right, can you see it?
Yes.
Right. So,
perfect.
So I think that let me start by saying that the title should change. I didn't pay too much attention. So it's not either or. It's not daily cash advances or loans, right? And it's daily cash advances and loans. These two products can work together. It's an interplay. And this is what we have seen. This is the evidence that we have from successful clients of ours that they use both. So let me explain what I'm saying here. So you have a business. How do you start a business? With your own money, right? You have your own equity. right? Let's say, you're doing well. So you're saying, all right, I want to use other people's money, right? So I'm going to get debt, right? So why is that? Because I have a more capital, right? My total capital the number is bigger, so I can buy more and I can become a bigger entity. And what's the purpose of the business? Right? For every dollar, euro, pound of capital that you deploy, you want to generate cash flow. You want to generate profit, right? So to our listeners, right, think about it. Your denominator is equity plus debt. The numerator is your net operating profit, right? Preferably after taxes. So, and this is your ROI. This is the return on invested capital. That's why you're in business, right? This is what you have to optimize. This ratio tells everything, pretty much everything about your business. So you have that capital now. How do you deploy it, Jerome? And you know that much better than me, since you have worked in the supply chain of things, right? How do you deploy the capital? You buy stuff. You have a cash cycle, right? Especially e-commerce, you don't really manufacture. So all your assets are merchandise receivables, pretty much, right? I mean, inventory and receivables. So you have that capital, you order, merchandise comes to your warehouse or to Amazon, it becomes a receivable. And after a number of days, as you're turning the cash, this is your cash cycle, as you're turning your cash, after a number of days, the initial capital plus the profit, hopefully, it will return back into your pocket, right? That's the essence of business. So over a set period of time, you can turn that capital a number of times. In this example, let's say 3, right? So let's add daily cash advances into the equation. What happens? Imagine the world, you sell today, you get paid today, right? Oh, great, this is a product. Let me see. What will happen? What will happen to my capital structure, to my cash cycle, etc.?
It's called being Amazon, no? Selling
Excuse me?
today, get it's being called it's called being Amazon. It's selling today, getting paid today. That's what they
Exactly.
do, right? It's e-commerce
Exactly.
platform that.
Exactly. So what happens is you will be able to turn your money faster because you're not waiting for any marketplace to pay you. The cash is immediately available and it is added into that cash cycle. So over the same period of time, just like before, you will be able to turn your cash more times, right? And what does this mean for your business? Right?
More
What does it mean?
sales,
You will generate more sales. And this is an example of a client of ours that they joined like back in November. So this is an example. You will be able to generate more sales. And what else? What else? More profit, right? Think about now. The capital deployed, the capital structure hasn't changed. The denominator, equity plus debt, hasn't changed at all. It remained the same. But what did we do? You put your
increase,
business on
yeah.
steroids. You put your business on steroids. So your ROI increased. Your balance sheet is the same. You have no leverage. You have no debt. You do not have any more debt, right? But you accelerated the cash cycles and you generated more profit. So your ROI increased. So, and of course, this is the same case. The same case is also if you don't use debt, right? This is obvious, right? You just have equity. You're not
Even
using
more.
debt.
Exactly.
Yeah. In this case, maybe even more. I mean, yeah, even more. So now it's not a beauty contest. There are pros and cons for both, right? So let me start with a loan. A loan is a great product. Using other people's money efficiently, it's great. A loan, debt is cheaper than equity. So as you add debt into your business, your cost of capital decreases, right? We're getting now into some fundamental corporate finance concepts,
Except
right? But what I'm saying is as you add debt is always cheaper than equity. Let's say accept this axiomatically, right? So as you add more debt, your average cost of capital, this weighted average cost of capital decreases, and that increases the value of your company. And of course, if everything goes according to your plan, you will end up with a bigger business, with a business that has a higher valuation. Everything is, how can I say that? 5-star. Now, what are the disadvantages? Do things always go according to plan? That's number one, right? What if there are large deviations and you have committed future cash flow from your business to pay back principal and interest? What if the 1,000 units that you purchased, you ended up selling 800? What is the true cost of your loan? Is it just a nominal interest rate of 8, 9, 10%, 6%? Or is it a multiple? This is something that many businesses don't even bother or don't have the time, the bandwidth to examine. And of course, as you add debt, there is also an optimal point, right? There's an optimal point that beyond that point, adding too much debt into your business increases your default risk to the eyes of the bank, and actually your interest rate will start increasing, right? I'm just trying to summarize. And one last slide, and I'm all yours. All right, pros and cons of daily cash advances, right? So obviously what we said, you generate more sales, more profits, your ROI increases, you put your business on steroids. But let me focus on 3 things that we haven't mentioned yet. Number 1, on and off, right? You don't make any commitment. You can use it for a month, for 2 months, for 3 months, then you can switch it off, right? It's non-dilutive. You're not adding debt. You're not adding a new equity partner. It's your business, right? You're just using the expected payment more efficiently, if that's the right phrase. 2 more esoteric points. Your balance sheet will look better when you go to get a loan if you're using daily cash advances. Why? Because you're generating more profit for the capital deployed, and you have more room. Your balance sheet it looks better to the eyes of a bank. And the last point for me, it's very important, is an insurance against uncertainty. And this is something that we have all experienced, right? Adding debt to a business, you add uncertainty into an already uncertain venture. This is not the case with daily cash advances, right? So if things go south, if pandemic number 2 appears, if something else, another unpredictable event in this random world that we inhabit happens, daily cash advances will not increase the fragility of your venture. The main disadvantage is if you don't use this product well, it will eat out of your profit margin, right? Think about it. Let's say you use that product and you don't grow. What happens? You're just sacrificing part of your profits to pay the fee of the daily cash advance. This can be the case, and I will stop sharing here. Of course, this can be the case, and we have seen cases of clients that they want to use the service for a month or a couple of months because they're facing a liquidity crunch. Fine, you do that, and you know that you're doing that. That's totally fine. So I don't know if I tackle everything or.
No, that's. I think that's very insightful. Mike, the question I just had before, and it really gets in well now, is like, if you're a business owner, what would be like, you have your own, because I know you were a seller at one point. It's like, how do you look at that, and how would you sort of leverage? Let's say you're doing $500,000 today on Amazon, let's say turnover, right, yearly, and you've got big growth expectations, and you want to grow to, double, triple, you want to get above 1 million. Obviously you need to have more cash to buy products, to buy stock, and so on, more cash to do advertising, probably to translate to other content to other countries. How would you go around, like, okay, I need let's say I need, just for the exercise, I need 200,000. just to buy more products and just to be able to sustain that growth. How would you go around?
Yeah, this is now a personal question because first of all, I was never an e-commerce seller. I was an old school seller, right? Back in the day.
I would never
But yeah,
call you old school, but
yeah,
but no,
yeah,
you have
back in the
experience
day.
in selling, and
Yeah,
like what would you be if as an owner you say, okay, I need to find 200,000, and that's for the purpose of our
listen,
exercise.
now this is again, it's what I mean. Again, 200,000 loan for a 500,000 business. I mean, that's a lot of money, right? That's already that percentage is huge to my eyes. I always say you really have to know what you're doing. So let's assume that you have that product that is doing well, and also let's assume that this product is not like a trendy product. It's not like a fluke. It's not like, let's say, a product that has a lifespan of 3 months.
Okay.
So you have a product reliable, highly profitable, and you know that people will always buy this product. I don't know. It's a pepper grinder. I'm just making up something here. You have a pepper grinder. Is that you have reliable future cash flows at a good margin that they will be able to service the principal and the interest payments. You can go get a loan, right? So you want to get a loan to buy more of that stuff or get a loan to find a complementary product that you can the already established product can help you sell this, right? So this is an example, a logical example from what based on my experience. Obviously now, if there are COVID loans out there at low rates, people go and get them, right? Because this is cheap money. It depends on the jurisdiction where you're in. Some of it is guaranteed by the state. So assuming that you know what you're doing, assuming that you know how to deploy that capital, you can go and go ahead. Now, daily cash advances, it's complementary. Let me backtrack. I always say to young sellers, so let's say under a million, and also, with more hair than myself, I always say to them, get your bachelor's with daily cash advances, and then you can graduate to a loan, right? Because if you don't do well with a daily cash advance, yeah, there's no downside, right? There's not a big downside. It's your own equity, it's your own money that you're playing with. So get your bachelor's, work on that, because you might be able to restock faster, right? You will be able to launch a new product. You will be able to augment your growth by using this accelerated liquidity that we provide. And once you feel comfortable, then you can start playing with other people's money, right?
Yeah,
Because that's for me. There is also this. Is what I said. Adding debt to your business makes you fragile.
yeah.
That's number one, right? Uh, so you have to be mature, ready, really know what you're doing, and always have enough. Let's imagine if you're the way I will approach it is if my wager on the future doesn't materialize and everything is and the deviation from my plan is big, will I be able to survive? Let's take this scenario because we are entrepreneurs. We have the optimistic bias. We are always thinking that things will be rosier tomorrow because that's why we're entrepreneurs, right? That's the essence. However, this optimistic bias in some peculiar way find its way into our spreadsheets, right? So we start forecasting and we have that bias inside our forecast. So, and then reality kicks in and there are deviations, right? And deviations, as I mentioned before, will impact the true cost of your loan. So again, get a loan, but if things go south, you will still be robust to to pay back, or use the remaining of your capital to be in operation. So that's my short long answer. So that's
Your good answer. So, and I love what you've just said about, okay, actually you need to have a proof of concept. You need to have a product which is selling well, a good conversion rate, and that like funding, be it loan or be it advance payment, like advance cash, is not going to magic to the product if it's not selling it. Like you need to
exactly.
make sure. And I love the idea of, because we're talking a lot when we do strategic sessions with our customers about focusing, starting somewhere, starting sometimes maybe small, but grow, make a proof of concept and then expand. And that very much is the case here of saying, okay, you just start, make sure your product, even before asking for any money, make sure that it works. And then the first step, what you said, if I understand well, is like start with advanced cash, and then once you've put money into this, the wheels are spinning a bit faster. The next step of really getting the wheel bigger is to get the loan, right?
Yeah, I mean, this is one approach. Of course, what I'm saying is it does not resonate with seasoned entrepreneurs because they already know what I'm talking about, right? So when I have, because we're talking also with clients that they're over 5, 8, 10, 12, 20 million. So they already know what I'm talking about. So they will also use daily cash advance to fine tune their capital deployment, right? There it's a whole different conversation, right? And actually, I will dare say it's an easier conversation because they're seasoned, they know what they're doing. They're not asking silly questions. Maybe that's a bit too harsh, but they are there. I mean, they're already very successful, so they know what they're doing.
They
And
probably did
and
the mistakes in the past already.
of
So
course, of course, you're absolutely right. They did the mistakes in the past, so they've learned. So again, if you're under the 1 million, under 1.5 million, again, why are you building the business? To generate future cash flow. Let's say you're aiming that one of these Amazon aggregators will buy your business. If I were an Amazon aggregator, what will I look? What should I invest? I want guaranteed future cash flow, right? Because I'm putting my capital into your business. I don't want to experiment. I want to have something steady. All right, now this is a solid profit margin. We can defend it with some PPC, with better optimization of our supply chains, et cetera, et cetera. So again, think about it. When you buy a loan, when you get a loan, well, it's other people's money. It's like somebody's investing in your business, right? Somebody's adding money into your capital structure. So what do they want? Guaranteed future cash flow, right? Guaranteed future cash flow. Why? To get back their principal and their interest. So it's the same concept. So it all comes down to what you're doing. So finding the right product, the POC, the proof of concept, slowly scaling, maybe pivoting, right? Adjusting, again, play to the tune of the band, improvise, as a good entrepreneur slash dancer, and then, you will go, you eventually you will be successful.
samba is a key. And
Samba.
if you've got questions, so please do type in the question into the chat area, and we'll be happy to answer. I've got one question: is when would you say is the right time to start the cash and advancing? Is it very beginning, or once you have the proof of concept of your conversion rate is increased? Like, is there a good timing and a less good timing?
Well, again, when it comes to storefront, we want to see some, let's say, we want to see some history. We want to see that you're over that 30, 35,000 balance a month. All right. So it's 350, 400. You have so that means that you sort of know what you're doing. Yeah, you know what you're doing. You're dealing with Amazon successfully. You have some processes in place. So yeah, for us, we do not onboard people that they're just starting, right?
Makes
So
sense. So, but let's say it's a bit from your point of view, from the point of view of a brand or a seller selling on Amazon. Is there so you've achieved, let's say, without below 35,000 a month, nobody will talk to you. okay, clear. But when is there something which should trigger? Is there a right moment to do that, or as soon as you think as soon as they've reached that, they should look into it?
Well, I mean, again, it's what are the needs? The needs are, okay, I'm doing 35K. I have my proof of concept, and something is holding me back, right? I want to build a more sustainable business. So I believe that if I have access to the total balance of the marketplace, I know what I'm doing and I will put it into work, and that will take me to a higher place. That's the right moment. That's the right
Okay,
moment.
so it's yeah, that's just hitting that or just spinning the wheel or a bit quicker at that moment where you need the extra water for the mill to work
Spinning
feasible.
the cash cycle and not the wheel of fortune. That's it's the
Let me
correct.
write that down. It's like
Exactly. So
spin the cash wheel and not.
and not the wheel of fortune, so you have to know what I'm saying is you have to know what you're doing. So I know what I'm doing. I'm going to accelerate my cash cycle. I'm not talking about fortune and luck and maybe I will succeed and I know what I think, all that stuff.
You
Yeah,
know what,
it's
Costas? You should go on a little box in Las Vegas and on the main
yeah.
boulevard there and have that. And I'm sure you would preach it to a lot of people there. That's a great saying.
We wanted to go to the Prosper Show, but again, with all the COVID and all those,
Difficult.
again, yeah, we decided to pass. So next year, I'll be there.
Next year you can like address the crowd, and that's cool. What do you have? A question I often ask is like, do you have like good examples and bad examples of things you've seen of
Yeah,
things
yeah.
which have gone well or and not so well, and learnings from the not so well and the well too?
That's a great question.
Thank you very much.
Let's focus on the
My pleasure.
downside. The
Mhm.
downside. Uh, growing too fast. Growing too fast. What does this mean? You cannot, especially if you're a fulfilled by merchant, right? So your delivery times, you have a high ODR. You get suspended for ODR. You make promises that you cannot keep. You don't have the right processes or integration with your suppliers. So I see like great businesses, private label business actually, in the bath category, is the right category. Good people, young entrepreneurs, smart, and you see that uh, too much growth compounded, coupled with the fact that they're not fully integrated with their supply chain. The suppliers don't deliver on time. They make promises, then they end up being suspended, right? So that's an example where I always say, just put the processes in place, put the right software in place. Another great case, the positive, US seller, over 10 million, what else, 20 million in multiple omni-channel, multiple marketplace platforms. He invested heavily in technology, and then he could scale seamlessly. So
And
this is
what do you mean by technology in
technology. I mean,
softwares
like
to?
software, like repricing, inventory management, supply chain, even like automated response to consumers. So all that stuff. And I see a lot of cases where, oh wow, this guy's going places. Of course, they're a bit older, more experienced, and of course, I'm not saying that the first cases they're not going. I think they will be able to make it, but things that you thought are not that important, but they ended up being very important. And of course, when you're suspended on Amazon, that's a whole different ball game there, right? Or in any marketplace for that matter, right? You know, let me think of something. The other thing is, the private label, building brands. The first case, very successful, committed, resilient, uh, build a good team of engineers next to him, right? invested in 3 product categories, made mistakes, but they were not big mistakes, right? And yeah, and ended up being successful. So
So
again,
I
I don't know,
think
maybe I didn't answer the question very well, but yeah, maybe
no,
that's,
don't be harsh on yourself. It was
I'm
cool.
trying.
No, so the thing I hear a lot with what you're saying, and it makes a lot of sense to me, is that like integrating the supply chain, and that actually the you can't be successful on Amazon if your supply chain is not working. It's like, and supply chain is very vast. Like it's from buying to getting the products to getting them to FBA or to FBM to the end consumers. Like this whole thing, if you don't have that in control, it's not going to work. And if so, if you're not super good, then you need to use FBA, and then just make sure that you get the supply in time. And you're right that oftentimes, like it's really a shame when it's a super brand and the bottleneck is within the supplies. Like you can say, wow, they could do so much.
I think it's absolutely, I mean, I guess that's what I'm trying to say. This is huge, right? Because think about it. We give you the tool to restock faster, and you start doing it, but then everything collapses. Why? Because you don't have the right infrastructure. And I really appreciate when retailers say, I mean, and I had a case last week with a couple of Americans, and they say, listen, we like it, but we don't have the rails yet in place. And that says a lot, and they're already doing like a lot of a big turnover, and they say, but for your product we have to look back, uh, we have to put the right rails in place so we can run, right? So we can go faster. So this is a great answer, and I can understand so much about the entrepreneur that gives me that answer. They really know what they're doing. Great people to work with in the future, I hope. So
Yeah. And so I have a question for you, and we'll get to the end of the question. So anybody wanting to ask anything, please do before we wrap up. Is because supply chain is so important. You've got there's always this choice about doing FBA and FBM, and typically, like the best way to be prime eligible and to sell more is FBA. That's the easiest way, and FBA gives you a lot of flexibility. What's your take? And let's maybe less your area of expertise, but as you work with a lot of sellers today, is how do you reconcile? What's your recommendation, or what's your view on the choice between FBM and FBA?
yeah, that's a tough one for me to answer. I have seen successful
No,
cases in both. Obviously, FBA, it's a no-brainer, right? But also FBM, though, it's the fact that they invest a lot on technology, uh, timely supply chain, and everything. So I guess for the latter, they're bigger entities. They're bigger
okay.
entities for the most part. They're not small. So
Yeah, there's an element of scale, right? If
there's
you're
an
too
element of
small, then
scale, right. I mean, there are cases of people who actually send people, they have people in China full time, they go over there, and so yeah, I think it pays off to start FBA, and as you
bro,
pass
yeah,
the various milestones in this Amazon ritual, there might be a moment where you say, I'm just going to go FBM. But again, they're larger entities for the most part. Again, I'm not an expert on that. I'm not an expert on
yeah,
that.
makes
It's
sense.
just it's just my sample. It's a pretty big sample, but I'm not an expert. Remember what Mark Twain said. Who is an expert, Jerome? Some guy from out of town. So
Exactly, but for me, it sort of makes sense. And like the scale is like the size of where you are, but it also, so you need to be patient. And a lot of sometimes people just think that Amazon is El Dorado, and you just go there, wait for it, and it will expand. No, it's complex. You need
but
to handle the
even
supply chain, the branding, and yeah,
But even El Dorado didn't exist. Even if you look at history, El Dorado didn't exist, right? So it's a no. This is a long game. This is a long game. If you wanna build a business, you play long. It's not from nothing to riches. We're not talking about multimillionaires. No, it's a long game. And hopefully it will be something that you will be able to eventually to exit, sell, or I don't know, or keep running it. So.
And I think that's a great closing comment, that Amazon is a long end game, and that financing and or either loans or cash in advance is only something which will be supporting that. But you need to have a case for success. You need to be patient to build it, and only use it really when you know that it's working well. So you're not a wizard, you're not no magic from Storefront, but it can certainly help companies which have got the potential. So thank you so much, Kostas. That was great to
Thank you
have
very
you.
much, Jerome.
It was
And
cool.
hopefully I'll
And
see you in the real world soon.
we will do that. We will do that, and we will see. So we will have a webinar next week. I think we have multiple ones, but there's one with Destiny, which will be talking about advertising, which will also be a very interesting how to launch brands with the advertising side. We talked about today how to get like helping on the funding on the supply chain side, but also you need to build like the engine with the money, but also the branding side. So that will be exciting. Thank you very much, everyone, and have a great afternoon wherever you are.
Merci,
Bye-bye,
Jerome.
everyone.
Ciao.
Thank you.
Thank you.
Ciao.